Dollars. Today, I'm going to be talking about strategy, formerly known as MicroStrategy. I'm also going to be talking about STRC Stretch, the most recent preferred stock offering by Strategy. And in general, I'm going to be talking about what the company, what strategy is trying to achieve, how they're going about doing that, and then what some of the risks are with this, and then how I think about valuing this company because it's pretty complex. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in strategy. It's fairly small, but I do have a long position in strategy. I'm sure it will come up. I also hold some Bitcoin. So this video should be for your entertainment purposes only because I could be wrong about everything that I say in this video, and you need to do your own research before making any investment decisions. Hi, Transient Stacker. Thanks for hopping on the stream. So today I'm going to be talking about strategy, and this is a very interesting company. I will start off and say, this is a company that currently has a market cap of $117 billion, and if you look at their financials, as you would most companies, you'll see their revenue is a tiny fraction of that, right? So this is their trailing 12 months revenue is about 460 million. All right, so that right off the bat puts them in a price of sales of like, I don't know, 200 or something ridiculous. Then if you look at their actual profit here, their operating income is, negative, or let's call it roughly break even, and it has been for years, right? And so this is a tiny footnote on the company is their operations are very, very small compared to their valuation. That's because they've started this focus, and they call themselves a Bitcoin treasury company, and that's what I'm going to spend all the rest of this video talking about. I just would be remiss if I didn't mention that they do have operations. They have a business intelligence software product. I don't actually know the details on that because, again, it is not meaningful to value this company anymore as far as I see things. You may disagree, but I really just don't think where they're at and where the company is heading that those operations are meaningful. And so really it all comes down to their Bitcoin treasury operations. And so that kind of brings me over to this dashboard that they have at strategy.com, which is very, very helpful. The first couple times I covered this company on my channel, you had to dig through all their filings and their presentations and tweets from Michael Saylor, or 8Ks that contain that information to really see what is the current state of the company. Now they just put it right out there for you. Lots of information. It's very, very helpful, very useful. And so you can get this snapshot of the company. And so, for example, right now we can see, I think this was last updated, a lot of it, some of this is reported roughly weekly by them, but you can see they hold, as of the last report, which I think was on Monday, they held about 607,000 Bitcoin, or maybe rounded up to 608,000. And, they also have here their overall total fully diluted shares outstanding. If you go to this other tab for shares, and you can see this calculation here that, fully diluted, they have about 316.7 million shares. And that has some assumptions baked into it in terms of their convertible debt getting converted into common stock. Same with their the strike, their convertible preferred shares, which I'm going to talk about these in more detail in just a moment. But this assumes that everything that could be converted gets converted, and now you see sort of the fully diluted share count here. And based on that, you can look at metrics in terms of like how much Bitcoin do they have per share, which gets me to what is this company trying to do. And I think their number one target, their number one performance, the metric they're trying to optimize for overall, when you view the whole everything that they're doing into context, is this Bitcoin yield, is what they call, or BTC yield. And this is how much Bitcoin does the company hold per share of common stock. And I think really you could extend that to maybe say per fully diluted share of common stock. And that's what they're trying to increase over time. They're trying to, so if you're a common shareholder, you just buy the stock, the ticker MSTR. The overall goal of the company here is to increase the amount of Bitcoin that your shares of MSTR give you a claim on. And they do report this, and they say, for the 2025, so far, this was as of when they put out, by the way, this is the STRC investor presentation that just came out, I don't know, 2 or 3 days ago, maybe, yeah, 2 days ago, I think. Maybe it was yesterday, sorry, it's been a bit. But this is Stretch. This is a new preferred stock, and I'm going to go through this in some detail in just a minute. But This investor presentation is fairly up to date. Maybe there's a date even at the beginning. Well, it just says July 2025. So, but getting back to the company itself, sort of the big picture as we're narrowing down in on things, this is what they're trying to achieve, is increasing that amount of Bitcoin per fully diluted share. If you divide this out, I said they have about 607.7 thousand Bitcoin, and the fully diluted share count is 316.7 million. You can get a number. You divide that out, and it's like 0.0019 Bitcoin per share of MSTR. And so their goal over time is for that number to go up. And how are they doing this? Well, it's not through their operations, through their the software product that they sell. They are actually issuing financial products. They issue financial products, and then they buy Bitcoin with the proceeds from those issuances. And their goal over time is to be able to retain more Bitcoin than what they originally had per share. And so, what products do they have? Let me go through here real quick before I dive in more deeply. So they have Stretch, which I'm going to talk about in a minute, so I'll leave that one for last. But let's start off with STRF, or colloquially called Strife. This is preferred stock, perpetual preferred stock, meaning if you buy this, right, once the company issues it or you buy it, the company is never going to call that back. They are never going to buy it back from you and give you your principal back. Your principal is effectively gone, other than in some major edge cases. But effectively, it is gone forever, and in return, you can count on getting this quarterly dividend paid. It's a fixed amount. I think it started out at, I want to say it was $10 per share of Stripe. I believe that's what is paid out. And so you get that every year forever and ever and ever, right? This is perpetual, meaning forever. And so that's what Strife is. And so this is a preferred stock. It's very similar to debt, as I mentioned, except you never get your principal back, right? Debt usually has, the maturity date, at which point the company is going to stop paying interest, but instead have to pay you back all of your principal. Strife is a perpetual product, and so it's basically never callable. So you just continue getting that dividend payment forever and ever and ever. Now, we also have Stride, which it was the ticker STRD. Stride is basically similar to Strife, except it is lower in the lower in seniority. So if MicroStrategy or Strategy were to get liquidated, Strife is the most senior preferred stock, and so it has more safety. And so because it has more safety, you can imagine that Strife doesn't have to pay quite as high as a dividend as Stride does, because Stride is lower on that stack. And again, there's actually a nice visualization here that has them in order of Strife being the most senior. Then they have Stretch and Strike and Stride. And Stride is like the lowest of all the preferred stocks, right? Of course, the common stock is the least senior. And so if Strategy were to get liquidated, that is the most risky, the one that would be last to get paid back. But if you go back and look at these products, right, Stride is very similar. It just pays this, I want to say it was also a $10 per share dividend, but it trades at a lower price generally, meaning that the yield on those shares of Stride are higher than the yield on those shares of Strife because of two reasons, right? And the one that I mentioned so far is that it is less senior. It is junior to these other instruments, so it is more risky. But then the other piece that is different for Stride versus Strife is that Stride is not required to pay the dividend. As far as I can tell, and this is one where I will actually state I'm not 100% certain of my understanding, but from what I can read and understand, the whole point of Stride is they're going to make a best effort to pay this dividend, but if they miss a dividend payment, there's sort of, you as a holder of Stride don't have rights to say, hey, you missed that one, so you need to, back pay me that when you're able to get the money. I don't believe any of that exists, right? Stride is, they call it similar to like a junk bond, where this is much, much more risky because they could miss a payment and there's really no recourse other than, at that point, probably the price of Stride would drop significantly because nobody wants to hold it anymore. Hey, because the only reason you want to hold this is to get those dividend payments. So it's MicroStrategy or Strategy, they have every incentive to continue paying this, because as soon as they even miss one payment on Stride, the value of that preferred stock is probably going to plummet to the point where it's basically worthless for them to issue anymore because nobody wants to buy it. And so it's sort of like a bit of a game theory there that gives Strategy the incentive to continue paying those dividends. And so based on that, as long as they have the ability to do so, they probably will continue paying the dividend. But again, it is much more risky than Strife. So that's an overview of Strife and Stride. Now Strike is, once again, it pays a dividend a little bit lower. It's 8%, but Strike is also has this ability to be converted into MicroStrategy common stock or Strategy common stock. I think it's at every share of Strike can be converted into 1/10 of a share of the common stock, right? Or maybe the alternative way to say that is every 10 shares of Strike can be converted into 1 share of MSTR. I think there might be a minimum price on that of like $1,000 per share of MSTR, but effectively the point is your shares of Strike are each pegged to about 1/10 of a share of MSTR in terms of what it can be converted into. And so because of that, Strike pays a lower dividend, but that conversion is a very, very interesting piece that makes the value of Strike closely correlated to, or say loosely correlated at the moment to the value or to the price of the common stock, to the price of MSTR. And so that's interesting. And again, this is one more of their financial products that they offer. Different people are interested in different in each of these for different reasons, right? Somebody who wants a very, very safe income might buy Strife. Somebody who is looking for a higher yield might buy Stride. Somebody who wants some yield but also wants some upside potential from Bitcoin going up quite a bit in the future would be interested in Strike. And then this brings us to the new offering that was just announced a day or two ago, Stretch. This is ticker will be ticker STRC, assuming that it closes and lists and everything everything happens as they expect. Stretch is kind of the inverse of some of these other products, where instead of having a fixed dividend that it will pay, Stretch will will increase or decrease the dividend that it pays in order to try to keep the price of Stretch roughly flat. And so they have some interesting, I'm going to spend a little bit more time on this one going into details because I haven't talked about this one on my channel before, and it's a little bit different than a lot of these other things that people are familiar with, right? They have debt and such that is very similar to the preferred stock. Their goal here is to say, hey, if rates, the general market interest rates go down, when rates go down, something that is paying a fixed dividend, that says, hey, we're just going to pay $10 per share per year forever, the value of that will go up, right? Because as the market rate for rates is decreasing, that makes the thing that was already paying a certain amount actually increase in value, right? Because relative to the yield that you can now get with newly issued debt, this is paying a higher yield, so therefore it is worth more. And inversely, if the overall market interest rate is going up, the value of something that is paying a fixed amount is going to go down, because now you can, relative to what it was previously, you can now get a higher yield elsewhere than what you could get on that existing product that's just paying that fixed amount. Stretch, inversely, is going to say, you know what, if rates go down, we will decrease our dividend that we're paying, right? Because we want to kind of just match those changes in the overall market's interest rate, because we are trying to keep the price, the trading price of Stretch, stable. And so that's what this last, this bottom third here is showing. As the SOFR rate goes down, or the overall market's interest rate goes down, they're going to just lower their dividend rate, because they want people to say, oh yes, I can, what I am going to be getting on Stretch is, now again matching the overall interest rate I can get from many different products from the market, and so roughly it's worth the same amount. And they're very clear on this, that right here, they are going to do this. This is, a variable interest rate product. It's going to pay monthly. So maybe I should go to slide 22. They're going to pay monthly, and they're going to, declare the rate and potentially adjust it every single month. So they say at the end of each month, they're going to announce the rate for the very next month. And so whoever holds it in the middle of the next month, 15 days later, or 16 days later, I guess technically, no, 15 days later, that is the dividend that you're going to get that was just declared. And so they're going to be ratchet that up or ratchet that down. They do have some guardrails. Hi, Ray. Thanks for hopping on the stream. So they do have some guardrails in terms of how much they're going to decrease this. So they don't have, rug pull it like, hey, we were paying an annualized 8% and now we drop it to 4%, just overnight, or within just a couple weeks. So they have these, I don't know where it's at, if it's in the presentation, or you have to read through some of the actual prospectuses. But it did say, hey, we have like these, they're only going to lower at a certain rate, but they might increase it at whatever pace it takes in order to get the price of Stretch to trade at roughly $100 per share. And, again, they say if it is trading too high, they're going to just decrease the dividend rate, or they might issue more shares, right? Actually sell more Stretch shares in the open market, right? Increase supply just to push the price down, right? Just sell it. Or they also have this provision in there where if it trades above $101, they can actually call the shares back. So that is kind of something you really should be aware of if you are interested in purchasing or holding this Stretch product that they are going to issue. But on the flip side, if it's trading below $99, they are going to, they're going to not sell more Stretch shares into the market. They don't want to add more supply and push the price down. And they are actually going to they're going to increase the dividend rate on Stretch. They're going to ratchet that up and up and up until the market says, okay, for the dividend that you're paying, we will value these shares at roughly $100 per share. And so that's, it's a really interesting product. You could imagine this is similar to like and again, I don't want to say it's the same as, because it does not have the same protections, but in terms of the stated risk profile, if you ignore some edge cases and such, it's similar to a money market fund, right? You put your money in, you buy it at $100 per share. Their goal is to keep it trading, keep the value of that roughly around $100 per share, and then you're going to get whatever the interest rate is that they'll pay on this one. And it's really interesting because, well, I should say they make this case in the presentation. They talk about how much money out there is in things that are similar to this, right? Things that just keep a stable value. And, they talk about money market funds, short-term treasury bills, right? This is similar to a 1-month treasury bill, right? Because every month they're paying you out, and the value of it stays right around par, right around that $100 per share here. But they very much make the case that, hey, look, we're starting out paying a very high yield. And I don't know which slide has this. I guess this is the what I was looking for. They're looking at pricing this at between $90 and $95. I don't think it's been announced yet, unless it was just happened this morning and I missed it. But that puts it at a yield of like 9.5% to 10%, which is very, very high for something that's going to have a stable value, right? They compare it to these other products that have stable values, and right now they're trading at around an interest rate of 4%, somewhere around that vicinity, right? I think the 1-month T-bills, I believe, are around 4.3%, if I saw that correctly when I was doing the research for this video. And so this is pretty interesting, right? You would expect this product to trade higher than treasury bills, because of course the risk on this product is way higher than the risk on treasury bills. But on the flip side, does it really have to be, is it that much higher than where it has to trade at 9.5%? I don't think so. So I do expect the dividend rate on this to come down pretty quickly. But it's not so bad if you are buying into if you're able to buy into the IPO, which in full transparency, I'm considering putting a little money into that. If you buy it at $90 or even $95, and they're targeting to titrate the interest rate or the dividend rate on this so that it actually trades at $100, well, you're looking at almost in a, as soon as they can get it trading at $100, somewhere between 5 to 10% upside in your principal, and then you get to hold on to whatever that dividend yield is after that point as sort of a stable value. So I'm viewing this personally as something where I could put a little bit of money in as sort of like a small emergency fund, rather than keeping it in a bank account, because I think in the near term, this is personally, let me just put it this way. I'm not going to say that it's safe, but I am comfortable with the risk of this product given the overall state of MicroStrategy as a company. And so hopefully that gives you some idea, some insight into what this new product is. If you have any questions, feel free to let me know. But again, I think that they are making the case here, and I'm going to flip back to sort of talking about strategy as a whole and their what they're trying to do and how they're going to increase the Bitcoin per share. They're making the case here, both here, that this is an attractive product because they're paying a higher yield than what they view as sort of comparable products. Again, they're not the same. If you read the fine print, they're even saying very clearly it doesn't have the same regulations as money markets or short-term treasury bills, has a different risk profile, but it's a lot of people are comfortable with those risks, and if you're comfortable with some of those additional risks that this product has, that's a gigantic spread that you might be happy to take versus putting your money in a money market fund or short-term treasury bills or just a bank account. Now, they're looking at this, and they're looking at, here's another way to visualize it, that there is so much capital out there that is in these other products, right? Money that is in bank accounts and money market funds and short-term treasuries. And they're saying, look, this tiny little dot, you can't see my finger where I'm pointing at the screen, but this tiny little dot here is the size of their initial offering for Stretch of $500 million. All of this money might also be interested in Stretch once it is available to the market. And the point that they're making here is all that money, or a chunk of that, let's say, you might say 0.5% or 1% of this money might instead move from bank accounts or money market funds into Stretch, because Stretch is paying a much higher yield and trying to still keep a stable value. That money is money that Strategy will now have to use to yield Bitcoin for their common stock, right? So they would take this, they would buy Bitcoin, and then Stretch would be covered through just their ongoing operations. So that's what I want to focus some of the rest of this talk on, because that's really where you have to understand and sort of convince yourself that this is going to play out well for Strategy. And this is where a lot of people who look into the company that don't think deeply about it just dismiss this as a Ponzi scheme, right? Because I will make the case real quick. I will try to make the argument as people usually say that this is a Ponzi scheme, right? Well, they say, okay, and again, this is just to be clear, this is not necessarily what I believe, but I will try to repeat the argument and then explain in a little more depth why I don't necessarily think that that's the case. So people who say this is a Ponzi scheme would say, okay, so you're going to take in $100, you issue this, I'll buy it from you for $100 per share. So you're going to take in $100 per share, but then you're going to slowly just pay back out cash and cash and cash forever, right? This is a perpetual product over time, and then sooner or later, where are you going to get the money for that? You're just going to, and then Strategy would say, well, we're going to sell more. We're going to sell more stock or more preferred shares of some sort, and that's where people look at this and they say, wait, so I buy something from you, you're going to pay me out over time, but in order to pay me out, you don't have a product you're selling to other folks. You're just selling other financial products, and so you're selling more products to other people that you're going to then have to pay them out, right? Because all those other preferred shares, whether it's Strive or Stride or Strike or more Stretch, every time you sell a new share of one of those to that person, you have to now start paying that person out into perpetuity. And so this does sound a little bit like a Ponzi scheme. And there is a scenario in which you would say, yes, that's most certainly a Ponzi scheme. The difference here is what they're doing with that money, right? The difference here is they're not just taking in that cash, parking it in a, just setting it under the mattress and then paying out folks over time where that cash pile diminishes. What they are doing is actually buying Bitcoin with it. And so now it really gets into a question of what is the value over time of that Bitcoin versus the, relative to the negative cash flows that the company is taking on, right? The cash that they have to pay out over time for these preferred shares or for the commons. I guess not necessarily the common stock, but for all these preferred shares, right? For Strife, it's paying out at, initial at $10 per share. Stretch is paying out this variable rate, but all of these are paying something out over time. And they said, hey, these are perpetual, so we're going to pay it out every year forever and ever and ever. And the real question here is what happens to the value of that Bitcoin relative to the cash flows and how much you have to pay. And so I put together a model here. Let me maybe make this a little bit bigger so that you can see. Maybe that might be too big. And the goal here that I had was to model this out, because the bet that Michael Saylor and Strategy is making is that the price appreciation on Bitcoin over time is going to end up being higher. Sorry, how do I articulate that? Give me one moment to think about how I'm going to say this. So the bet they're making is that the long-term appreciation on Bitcoin was going to be high enough that the value of the cash flows they have to pay out is going to be a vanishingly smaller portion of the Bitcoin that they hold, so that they're going to capture a spread with this. And so let me go through an example to make that make more sense, hopefully. So I was just using Strife here because it's the simplest one to model out. The math and the models are pretty similar for some of the other products that they have. But if we look at Strife was their preferred shares that were paying out, initial coupon of 8%. Nowadays, I think they pay, initial coupon of 10%, I guess. And now they pay about 9% because Strife itself trades, or when I looked this up yesterday, it traded about $119. And so let's look at a scenario where the company is just issuing 1,000 shares of Strife. Let's assume Bitcoin starts at $120,000 per Bitcoin. The long-term price growth rate of Bitcoin will be, I'm going to vary this and see what does that do to our model here. But let's say that Bitcoin grows 9% per year over the next, 100 years. Which you may say that's a little bit ridiculous. That's an average growth rate. It's kind of, you can model out all kinds of scenarios here. You could say maybe it grows at 30% for the next 10 years and then it goes down to 3%, or even then it's flat. I don't know. But if you assume a long-term growth rate of 9%, I'm putting this just as a, just a stake in the ground so we can see what it does for the model, and then it can vary it later. If they sell 1,000 shares of Strife at a price of $119, they raise $119,000, which almost lets them buy a full Bitcoin. They started out with 0.992 Bitcoins, and again, these were using actual dollar values as of yesterday. So at the beginning, they take this in, they buy Bitcoin, but your assets and your liabilities are matched, right? I just sold $119,000 worth of Strife, and I bought $119,000 worth of Bitcoin. So at the very beginning, you have just under 12 years of collateral remaining, which is sort of the inverse of, the inverse of the Strife price and the rate there. So at the beginning, I have 11.9 years of collateral because of that $119,000, and every year I'm going to have to pay out, what is it? I guess $10,000, right? So over time, if Bitcoin appreciates in price, let's just say hypothetically every year, and so this is where I have my model, starts out in year one, you start out with that amount of Bitcoin, and so let's just say you sell some of that Bitcoin, the exact amount to cover that $10,000 in the negative cash flows for the company. But then, so next year you start out and you have, your Bitcoin that you have remaining has diminished. But the value of Bitcoin itself, the value per Bitcoin goes up. Again, at the moment I'm assuming 9% per year price appreciation. So then next year you have to sell a little bit less Bitcoin because Bitcoin is worth more. And so that diminishes how much Bitcoin you have remaining. And again, Bitcoin appreciates more, you sell less Bitcoin, and on and on and on. And over time you can see you are selling less and less Bitcoin every year to cover what is a fixed amount of cash that you're paying out to those holders of Strife. And over time, this gets really, really small, right? It goes over. I did this model just to show how it happens on a long enough period of time. This goes down to the point where you sort of reach this plateau, and the amount of Bitcoin you're selling is minuscule compared to how much you have remaining. Because, you know, and again, this is a bad scenario, because do you really expect Bitcoin to go up to $400 million per Bitcoin or $600 million per Bitcoin? I mean, that sounds ridiculous, but at the same time, this does not include, like, this is not inflation adjusted, right? So what is a loaf of bread going to cost in 100 years, right? If we talk about some of these things, you know, prices do sound a little bit ridiculous when you look over a long enough period of time, right? Maybe $600 million Bitcoin 100 years from now is something like, I don't know, $10 million Bitcoin today. And maybe in today's dollars, because the rest of it is inflation. Like, I haven't actually done the math here, and you could if you wanted to. But the point is, these cash flows, right, what they're paying out to the holders of Strife, stay constant in actual dollar terms, while the Bitcoin price is going to go up over time, right? Even just for inflation, you would expect the Bitcoin price to match inflation even in the long term. So even in the long term, once there's maybe the exponential growth of Bitcoin is topped out and it's kind of like just matching inflation over time, that's still going to require less and less Bitcoin every year to be sold, because those cash flows are constant. You're still only paying out $10 per share of Strife. Now, it's interesting because Michael Saylor and a lot of other folks do expect Bitcoin to grow more than, you know, to grow at something like a 15% growth rate averaged, compounded over the next 100 years. And, sorry, I guess maybe I should have even said, even with that 9% price growth rate, at the end you do retain some of your Bitcoin. You retain about 2.6% of what you originally pulled in. So it's a very small amount. But the point is that at the very end of those 100 years, with that model, you have like over 1,000 years of collateral left with that Bitcoin. So effectively, what you have left is kind of what you're going to retain forever. And I even have a graphic here that shows over time. Let me zoom out just a tad bit so you can see the whole graph. Over time, the Bitcoin, this blue line is the Bitcoin that you have remaining, and the red line is a Bitcoin every year that you have to sell. And so the amount of Bitcoin you have to sell every year drops to nearly zero, and then the amount of Bitcoin you have remaining plateaus. Now, this changes pretty drastically if the price growth of Bitcoin is higher at all, right? I picked 9% because it's very close to the current yield on Strife. And so that's the point at which it kind of breaks even. Because, for example, let's say Bitcoin only appreciates 5%. Well, you're going to go negative, right? This is actually a losing bet over time if they were to be selling Bitcoin to fund the cash flows to pay out the Strife shareholders. You would actually end up, the Bitcoin that you sell over time would decrease, because sooner or later Bitcoin does actually catch up because of that exponential growth. It crosses over, and now the value of that sort of fixed $10 per share is minuscule compared to the value of Bitcoin. But it's negative from where you originally were, right? You had to pay out way more than what you got originally in terms of how much Bitcoin you were able to buy. But the fun part is if we look at this in the opposite direction. If the Bitcoin price growth rate actually ends up being 11% rather than 9%, well, that's a pretty big swing. Now, all of a sudden, at the end of 100 years of paying out the Strife shareholders, you have about, just shy of 20% of the original Bitcoin that you purchased. So today, every Bitcoin that they purchase, again, roughly, I'm rounding the numbers here, but if this were the actual long-term growth rate, every Bitcoin that they purchase, even if they were actually selling Bitcoin from day one in order to pay this off, they would retain 20% of that in the long term. So that's pretty interesting, because it's illustrating my point where the long-term price growth of Bitcoin versus the rates on these products, that spread allows strategy to actually capture Bitcoin in the long term for the company. So the common stockholder is now getting more Bitcoin per share. But I will also illustrate this to say right now, if I just looked at this and they issued this right now, and they issued this debt, or these preferred shares, and they now capture 1 Bitcoin, that's an immediate Bitcoin yield, as they would measure it for the common stockholder of 1 Bitcoin. However, they're going to have to do something to pay out those Strife shareholders over time. So the way I think about this is that there's kind of some long-term net Bitcoin yield that they get from their treasury operations that is less than what they're stating right now. And you may disagree, because clearly the company doesn't present it this way, but this is the way that I think about it and the way that I view it. And so really the question is, what do you think is going to be this long-term capture of Bitcoin from these treasury operations? Because at the same time that they are able to actually issue these shares, right? And so they have this, they talk about how much they could issue right now for Stretch, and then they talk about all of these different products that they intend to continue issuing, and that they're going to, when they do these, they're going to buy Bitcoin with it, and then that's going to sort of give them a bigger stack of Bitcoin, right? They have this layer of the pyramid here, this unencumbered Bitcoin that's going to grow as they issue more Strive or Stride or any of these products, because that gives them cash right now, and that they're going to purchase Bitcoin with it, and that's their goal is to accrue that for the common stockholder, for MSTR shareholders. But the part that you need to think about is, what are they going to do to pay out the folks who bought the Strife, the Stretch, the Strike, right? Because every preferred share that they issue, they are taking on a long-term liability because they have these negative cash flows to the company, right? Because they are going to have to pay out every quarter, or in the case of Stretch, every month, to the holders of those securities, because that's the promise, right? That's why people want to buy these, because they yield. And so that's really the question, and that's why I kind of have this model, and I think, okay, the Bitcoin price appreciation has to offset this, or else it's a losing bet for strategy. So that's really where a lot of the risk comes in for this company. I should go into some of the risks for strategy before I then go into some of the valuation here. The biggest risk is that Bitcoin, and I don't really have any graphics for this, but the biggest risk that we have here is that Bitcoin does not appreciate as they expect, as folks are hoping, because if Bitcoin were to be flat, they would eventually have to start, they would probably have to start selling some Bitcoin at some point, right? Because sooner or later, they're not going to be able to just issue more and more preferred shares if folks are looking at this and saying, there's no yield here. The value of all these would trade lower and lower and lower, because folks would say, you're not actually accruing anything. This is not valuable. There's no premium that you should get. The value of MSTR might trade right at the value of the Bitcoin. Maybe these preferred shares are going to start trading lower and lower, because folks are saying, all you're doing is buying Bitcoin, but the Bitcoin is not appreciating, and so your creditworthiness is kind of going down as you issue more stock, as you issue more preferred shares, because you are actually increasing how much cash you have to pay every quarter to the holders of those preferred shares. So hopefully that, hopefully you follow my train of thought there, but that's if Bitcoin does not appreciate in price, or doesn't appreciate with any significance, this company over time, over the longer term, does get, it gets harder and harder for them to actually pay out the existing preferred shareholders, and that sort of is a negative feedback cycle where it's harder to pay them out, therefore they have to issue new preferred shares, which then makes it harder to pay out the new amount of preferred shareholders, because there's even more, and so that's definitely a risk for the company. That's what I would say. A lot of people who are bearish in the company, who look at it as just a Ponzi scheme, that is what they are kind of honing in on. Again, it comes down to your viewpoint and your comfort with the price appreciation of Bitcoin. On the flip side, I know I'm bouncing back and forth here. Every time they do issue these and they buy Bitcoin, that does push the price of Bitcoin up, right? That shouldn't be lost on anybody. That as they are buying new Bitcoin from the capital that they get from issuing preferred shares, they are not only accumulating more Bitcoin in Bitcoin terms, but the value of Bitcoin does go up because they are increasing demand for Bitcoin in the overall market. So they may, maybe here's a simple example. Let's hypothetically say they sell $1 billion of preferred stock and they buy $1 billion worth of Bitcoin. Now the interesting bit is, let's say when they do that, because they are buying $1 billion of Bitcoin, let's say that pushes the value of Bitcoin overall up by $1,000, right? Let's say by them going out and buying $1 billion of Bitcoin, that's a significant demand on the overall Bitcoin market, and that increases the value of Bitcoin from $120,000 to $121,000. Well, cool. So if they bought that, and now not only do they have a new $1 billion worth of Bitcoin on their balance sheet as an asset, they also increase the value of their existing 71 billion Bitcoin by that additional $1,000 per Bitcoin. And so I guess you can't see my calculator here because the way I have the video set up. But if this goes up from 100, if you increase this, $1,000 per Bitcoin, and they have, what's that, 607, let me go back their dashboard here, 607,000 Bitcoin already on their balance sheet. That's an increase in their assets from their existing Bitcoin of $600 million. So not only did they get the new $1 billion in Bitcoin that they just went out and purchased, their existing Bitcoin increased by $600 million. And so that's an interesting dynamic that strategy has. And so I guess I'm just making the point that it's not such a far-fetched assumption to think that Bitcoin is going to continue increasing price, as long as, if they continue their Bitcoin treasury operations where they are sort of a constant buyer out there in the market. And again, they're not the only buyer out there, but they are adding buying pressure. They are adding increasing demand, or sort of maybe another way to view it is they are a constant source of demand for Bitcoin, and that does help prop things up. So it's not like they are just hoping and praying that the price of Bitcoin goes up. It is a fixed supply, and they are buying it, so therefore, they are actually helping achieve that necessary price growth, that price appreciation of Bitcoin itself. So going back and talking more about some of the risks of MicroStrategy, I did mention it's the price of Bitcoin going down, or let's say not even appreciating enough, is a significant risk to them. There are more risks. At some point, liquidity for their stock or for the preferreds could dry up, right? And that actually makes things harder for them, because that would limit their options on what they can do to generate more cash to pay out their preferred stockholders, and to actually then issue, be able to capture more of the spread and actually increase the Bitcoin per share for their common stockholders. Custody of their Bitcoin is always a risk, right? I mean, Bitcoin is this bearer instrument. It's digital, but is similar in, sort of think about the analogy if they were doing this with they were holding gold in their possession. If you have gold bars in a vault, somebody can go into the vault and take it. It is physically possible. Same with the Bitcoin. If somebody, again, we don't exactly know how they store their Bitcoin. I think that they have it custodied with Coinbase, but let's say some Coinbase employee or employees say that's a lot of money, right? 600,000 Bitcoin is measured in tens of billions of dollars. Man, we could do a lot with that. So if some group of Coinbase employees conspired to actually steal MicroStrategy's Bitcoin, I mean, it theoretically could happen. I don't know their entire the entire custody strategy that they have, but this is a risk that you have when you are holding MicroStrategy or strategy stock, because it is possible at some point that something could happen to the Bitcoin that they hold. Regulation is another risk that they have, right? There's both regulation on Bitcoin and around what companies can do for Bitcoin. There is regulation because Strategy is not a normal company. There could be regulations that get passed that specifically target Bitcoin treasury operations that really limit what they can do. And there's some let's say edge cases or long tail risks for the company where, if a country, namely the United States, really, Bitcoin becomes a really big deal and they are looking around and saying, what can we possibly do to get Bitcoin for ourselves? Well, Strategy, sitting here with their stack of over 600,000 Bitcoin, is a humongous target. And so whether that would come in the form of a tax or something even more invasive, where the government could actually, take control of some of this. I'm not going to say that will happen or is even likely to happen, but it is a possibility, right? So this is a risk that you should consider if you're looking at MicroStrategy. And then another long-term thing to think about with Strategy is what happens, what happens when they reach the point of diminishing returns. And I say that just to underscore, they currently hold what is almost 3% of the Bitcoin that will ever exist, right? They have 600,000 divided by the 21 million. Sorry, I'm doing the math here just to double check it in my head. So yeah, they have about 2.9% of all Bitcoin right now. Let's say they, if they double that, then they'd be roughly at 6%. At some point they're going to hit the limit to what they continue really increasing their stack, because there are only so many Bitcoin to go around, and not every Bitcoin is up for sale, right? Some of them are actually lost. Some of them are held by other folks who are just going to hold them for a very, 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 very long time. You might, sooner or later, I think, we've seen a little bit of this, but you might see even larger nations that are holding Bitcoin. And I don't think when nations start to acquire Bitcoin, if they are viewing this correctly, they're going to view this as sort of like proverbially the gold in Fort Knox, right? Where they're going to grab it and hold it, and it's going to sit there and park it. And they're not going to be trading that actively. So that is Bitcoin that no longer can be acquired by anyone else. And so at some point, it's possible that Strategy is going to hit this sort of law of diminishing returns where there's just not enough Bitcoin for them to be able to acquire to achieve the yields that you might want as a shareholder, just because there just is not that much Bitcoin that is available. So those are all risks for the company. The question really at that point is, what would they do? Let's say hypothetically they are able to increase their Bitcoin holdings and their Bitcoin per share over time, and at some point they have, let's say, 10% of all Bitcoin. So they have 2.1 million Bitcoin. What do they do then if they can no longer just do Bitcoin treasury operations and get any significant yield, right? Because at that point, doubling their Bitcoin per share, even if they never issued another share ever, would require getting another 10% of the supply of Bitcoin, which at some point it's just going to be no longer feasible. The question is, what does the company do at that point? And really they don't have operations that they can try to scale up. It's other than what they're doing with their Bitcoin itself. And so the question is, what are they going to do at that point? It's unclear. There's obviously many smart people at the company that are hopefully going to figure out something for them to do at that point, but it's really not clear what they're going to do. And so that is another risk, right? Maybe they just get big and they can't really figure out anything useful at that point that's actually a net positive or meaningful, let's say, to do. So that's another risk I think you have. Now, hopefully that gives you a lot of insight into the company. Now the question is, with all of this stuff going on and the complexity of this company versus like most normal companies where you can look at revenue and gross profits and what are their expenses and how do we think the market's going to grow over time and their share of it, how do you value this company? And it's really interesting. Like, I think a lot of folks talk about the MNAV, the multiple to the Bitcoin net asset value, right? So the Bitcoin net asset value is, all the Bitcoin that they hold, the dollar, the current market price, the current market value of all that Bitcoin. And the multiple to the net asset value is what is their overall enterprise value, which right now is reported as just shy of $130 billion, divided by that Bitcoin value, right? Because it's pretty straightforward for you to support a valuation for the company which says the value of the company, I'm speaking in sort of oversimplified terms here, but it's pretty easy to make the case that the value of the company should be at least the value of the Bitcoin that they hold, right? So the value of the company ought to at least be $71.6 billion. if that's how much Bitcoin they hold. And indeed, the value is at least that. In fact, it is significantly greater. It is 80% higher, right? That's what this MNAV of 1.8 means. It means if it was an MNAV of 1, that would mean that the value of the company is like almost exactly their Bitcoin net asset value. But because it's 1.8, that number is telling us the value of the company is 80% above the value of their Bitcoin holdings. And because of that, like, you have to really ask yourself and convince yourself what is an appropriate MNAV, right? What is an appropriate premium for this company to be valued at relative to their Bitcoin holdings. And this is where it gets really interesting, right? Because I think a value of 1 is an MNAV of 1, as I said, is obvious. You can obviously say they're at least worth what their Bitcoin is worth. But then they should get some premium because of the Bitcoin treasury operations that they're doing, right? They are actually increasing Bitcoin per share for the common stockholder. And so if you're holding the common stock, you have to say, well, there's some value for that. Is it worth 80% more than their Bitcoin holdings? I don't know. I put together just and this is really a question that I have no good answer for. I do think, well, let me just go through this model, and then I'll kind of give a little bit more context or color on it. So I put together a simple model which just goes through years starting at, I start at year 0, which would be like the current year, and then you say over time, what is their net Bitcoin yield that they can actually get? And so I will go back to their presentation where they say, hey, we were able to get, I think it's on slide 11, 20.8% year to date in 2025. That's great, but again, I think this is going to get drastically harder and harder as the amount of Bitcoin that they have goes up. I'm going to illustrate this just to say, let's maybe be conservative here and look at what does their overall Bitcoin per share do in this scenario. Let's say they yield 10%, and then 9%, and then 8%, and 7%, all the way down until after 10 years, they're not able to yield anything else, right? This, I think, is a fairly conservative model where you'd say every year they're yielding less and less and less. Granted, they're on a larger base, right? So even in year 5, when they're yielding 5%, that's an increase of 50,000 Bitcoin, even though from year 1 or year 0 to year 1, they're increasing by, about 60,000 Bitcoin. And that's a 10% yield at that point, right? And that's the point, is as they get more and more Bitcoin, even if they acquire just the same amount of Bitcoin from year to year and have no dilution, so no new shares issued, no new common stock, because they have a larger stack of Bitcoin, it's a much smaller percent in their Bitcoin yield. So it's, again, their size at some point is going to end up being an issue for them in terms of how much Bitcoin yield they can achieve. And so if I just look at this model, if you start out and you say right now, whatever Bitcoin they have per share, that's like the 100% mark, they'll eventually get to 170% of that amount. And maybe this would make more sense if I actually converted this into a percent. So as of right now, again, this is 100% of the Bitcoin per share that they currently have. The terminal value here would be 170%. So this would, by this model, if you think that once they're done being able to have a positive Bitcoin yield, that the MNAV should trade basically at a 1.0 at that point, you would say, well, right now it's trading at a 1.8. If this was what you thought the Bitcoin yield they're going to be able to achieve is from today, again, I know that they already did a 20.8% in 2025, but this is starting as of July 23rd, 2025, right? What are they going to yield from now in the next 12 months? You might say, or you would say, the MNAV ought to be at most 1.7, maybe even a little bit less, because you do want to get some gain on this, right? You don't want to just pay for 1.7 if you think that's really the terminal value of the Bitcoin they're going to hold. So what the market is telling you right now is they're saying that, well, that we think they're going to get more. So maybe they think they're going to keep getting a 1% yield for another, 5 or 6 years. And then they're going to sort of top out and not be able to yield too much more. So that's what the market is currently pricing in, right? And this is where you are, again, I do think this is the way to think about it, is if you are looking to actually increase exposure to Bitcoin, you are comparing the approach of let me just buy Bitcoin and hold it, because that would be an MNAV of 1, right? You buy 1-to-1 Bitcoin today, right? I put $100 in a Bitcoin, or maybe make the math simpler. If I put, roughly, what is it trading at? $117,858, I can buy 1 Bitcoin, or I can buy a certain amount of shares of MicroStrategy, which is going to be, right now my claim on that is going to be something like 0.6 Bitcoin, but over time I think they're going to increase my claim on the Bitcoin, because they're increase the Bitcoin per share to eventually be worth more than 1 Bitcoin for the shares that I would purchase today. And so that's really the bet that you're making if you're buying MicroStrategy stock when it's trading at an 80% premium to its Bitcoin value, is you're saying, I think they're going to get at least, comparing these two approaches, I think in the long term I will have more exposure. I will have exposure to more than 1.8 Bitcoin if I put $117,800 into MSTR rather than just buying the Bitcoin outright. So that is the bet. Now, what changes here if we think, hey, this year they did 20%, let's say next year they can do 15%, and then 12%, and then 10%, and then 8%, and then 7, 6, 5, 4, 3, 2, and then 1% after that. Well, if that's what you think, then if you're willing to hold it long enough, then you would break even around year 7, where they would actually, versus the MNAV of 1.8. Around year 7, you would actually then have more exposure to Bitcoin per share than just buying Bitcoin outright today and holding that for 7 years. And then everything after that is upside, and then long term, you would eventually get to, even more, right? So, but I do want to underscore, if the current MNAV, let me just put it over here, current MNAV 1.8, eventual, it's called terminal yield. If this was, and let me just pull the last value here. I arbitrarily put this out at 38 years, just a long enough time period to make sense. Terminal yield is 211%, then the actual gain over just buying BTC, it's not 2.1x, it's 17%. And maybe I should subtract off the 1 because it's actually the gain. It's a 17% gain over just buying and holding Bitcoin today, over the long term, if they would achieve these, Bitcoin yields every year. And so, personally, and again, this is not financial advice, but personally, there's a lot of uncertainty in MSTR. I think what they're doing is fantastic. I've hopefully explained it fairly well. If you have any questions, let me know. Let me know currently in the chat, or if you're watching this later, in the comments. Do my best to answer any questions you have, explain it. I think what they're doing is really interesting and cool, and has a good chance of ending up to actually be better in the long term if you buy MicroStrategy today, to actually outperform just plain Bitcoin. But there is a lot of uncertainty in that. And then you also have to ask yourself, how much do I want to be compensated for this risk? Because that's a 17% gain over Bitcoin over, if I look at this model over 16 years. Is that worth it to you to take that? Is that worth the risk that you're taking, that actually maybe they won't yield this, and maybe they won't ever even achieve an 80% increase in their Bitcoin per share? Because that is a possibility. And again, all the other risks that you have that I mentioned that come along with MicroStrategy stock that you don't necessarily have just with plain Bitcoin if you're just holding that. So, I don't know. Personally, I did buy a little bit of MicroStrategy almost a year ago, I want to say, somewhere in that vicinity. The MNAV was similar. It was like a 1.6 or 1.8 or something. It was a small position because I'm interested, and I'm willing to take that bet for a small amount of my money, but the majority of the capital that I would want to put towards Bitcoin, I personally would just buy the Bitcoin outright. And I have two reasons for that. Number one is kind of like looking at this math and the risk that you're taking when you buy MicroStrategy over Bitcoin. And you kind of have to have this hurdle rate where you have to really be convinced that they're going to eventually grow their Bitcoin per share holdings more than what the current MNAV is trading at. But then the other piece is the value of Bitcoin. Both MicroStrategy or Strategy and Bitcoin itself obviously are going to go up or down based on the value of Bitcoin itself. If forget about the Bitcoin per share and the Bitcoin yield. If between today and tomorrow, if the value of Bitcoin goes from, I'm just going to make the math simple, $120,000 per Bitcoin to $240,000 per Bitcoin, let's say it goes straight up, it just basically doubles in a day. Well, the value of Bitcoin is going to double in a day. The value of MicroStrategy is probably going to pretty much double in a day, right? Because this net asset value is going to go up from 71 to 142, basically. And this enterprise value is going to go up, and there's no reason for folks probably to think, well, if it traded at an MNAV of 1.8 yesterday, that's what I thought they could eventually increase their Bitcoin per share over time. I don't think there's any reason to think that that's not going to still be true tomorrow, right? Because this yield of Bitcoin is kind of independent of the current value of Bitcoin. It's what you get from all these operations they're going to be doing in the future, these Bitcoin treasury operations. And so when you're looking at this, I personally also do wonder how much is this Bitcoin yield going to matter versus just the price appreciation as Bitcoin. And so I see what they're doing as, again, very interesting, but I think the potential price appreciation in Bitcoin, you can capture that without having to take this risk. And again, that's really the risks that I talked about, and the potential upside is maybe they will eventually yield so much Bitcoin per share that you are going to be, come out ahead on this 1.8. And then the other question here, as I mentioned, is what are they going to do once they sort of reach this size where their yields are down? The Bitcoin yields from their treasury operations are, 1% or are very, very small. Hi, Walkaza. Thanks for hopping the stream. I'm actually wrapping up, almost done. But if you have any questions or comments on MicroStrategy, feel free to, leave them in there. Or anything else. I'm almost wrapping up my main topic, so I'm happy to talk about whatever if anybody has questions or comments. But I think, what they're doing is sort of a tailwind for the Bitcoin price as well, right? It is pushing the Bitcoin price up over time because they are increasing demand. And so it's really a major question of, do you want to take this bet and this risk that they're going to eventually outrun this MNAV or not? And then also, once they do get to the point where the treasury operations are low, how are they going to be valued at that point? Are they going to start figuring out some new product, some Bitcoin lending or something, going to be a Bitcoin bank, right? What MNAV would they be valued at that point, right? Because at that point they'd be valued on what is the potential that they can make from lending out that big stack of Bitcoin to folks at a particular interest rate, Bitcoin denominated interest rate. Yeah. So that's kind of my thoughts on it. And personally, I do have some, just to be full transparency, I do have some shares of MSTR. It is significantly smaller than my overall Bitcoin holdings. And I personally don't have plans to buy any more MSTR at the moment. As I mentioned, I think I will probably buy some stretch the STRC, because that's sort of fulfilling a totally different, not buying that necessarily as an investment, buying that as an emergency fund. I'm not planning on putting tons and tons of money into it, but it's a very interesting product. All right, I did get some questions. Cool. So thanks. First of all, just thanks for viewing and being here, guys. Guys and gals, I guess. I'm not 100% sure. Ray says, have you looked into MSTY? I've seen so many investors YOLO into it. So MSTY, I believe that is a product. So I have not looked deeply into it. Let me preface it. I would just say I personally don't like those kinds of products because they're selling covered calls. That's the we can. Whoops, MSTY is what I meant. And so there's a couple of these things out there, and there's a couple of different versions that work on different underlyings. Right, this one is obviously on MicroStrategy stock. Some of them, there's one I think that works on Tesla. Some that go for others. The issue is because I've sold covered calls myself. Right, the issue that you have here is, in order to get these distributed, it's always good until it's not. That's how I view these products. And that's how I view selling covered calls. If you're not that's the trade-off that you're making, is when you sell this covered call, if it's out of the money, and especially if it's far out of the money, and clearly you can ratchet it up or down depending on how close you are, but you're selling upside, and so you're making these bets. It's like rolling dice, and selling a covered call sufficiently out of the money, you might say, well, it's similar to rolling a die. Let's say it's rolling a 20-sided die, not just a 6-sided die. And if I roll from a 1 through 19, I'm going to make money. But if I roll a 20, that's when it sort of goes, the stock goes past my strike price, and now I'm actually losing money relative to if I had just bought and held the stock. The thing that I don't like about MSTR and about selling covered calls on something like this is there's a very real possibility that Bitcoin, which is the underlying commodity to the underlying stock for this ETF, Bitcoin, as I said, Bitcoin could double tomorrow. Like, it's happened before where you have these huge moves, and when that happens, everything that was, that they covered, all the shares of MSTR that they sold calls against are highly likely going to get called away, right? Because again, if that happened tomorrow, the price of MSTR, Bitcoin goes from $120,000 to $240,000. That is possible. Let's say someday, let's say if the U.S. announces we are buying Bitcoin to fill our, strategic Bitcoin reserve. We're going to buy a whole ton of it. What would that do to the price of Bitcoin? Who would sell at the current price? Probably nobody, right? The price would jump drastically. Maybe it triples overnight. It's possible. Nothing prevents this. And if that were to happen, the price of MSTR would correlate with that, and it would double or triple. And so now it's trading at, hypothetically $800 or $1,000 in one day. And so all these covered calls that maybe got sold, again, strategy's trading at what, 420 right now, 415. Let's say they sold covered calls over the next, week, month, 3 months. I'm not sure what their duration is. That ratchet up from 400, 500, 600, 700. Well, all of a sudden, every share that they have is getting called away. If MicroStrategy is trading at $1,000, right? And there's not a whole lot of options they have for rolling those or anything, because the profits you get once you're fairly well into the money to close out your calls and try to open up new ones, it is just small, right? You have to go out so much further in time, and so it basically kills your yield. And that's the issue that I have with these is over time, if I would say when, if you wait on a long enough time scale, it will eventually happen. When the price moves quickly against you, the actual underlying sort of principle that you have gets diminished. And so I'm not personally a fan of these. I'm not going to tell anybody who's out there who invested in them not to invest in them. Like it is, you don't have risks that you have in other things where there is a risk. That the reason why I don't like them is because you're kind of taking away the best possible upside that you could get in order to get income today. And maybe that's what you need, and maybe that's what some people really want out of this. But it does worry me that you could have these, that if you're planning this for your retirement strategy, right, and that if you're looking at MSTY and saying, what, if I just get, what is MSTY actually? It's just not going to tell me the yield real easily. I don't know where to look at it. Okay, so they're paying right now monthly dividends. I'm just going to average this from what I see. Monthly dividends of basically, let's just call it $2, right? Because I'm looking over these past months. I see some that are at $4, some that are $1.30. Let's just say it was $2 per month, per year. That's going to be $24. And let's say you said, hey, if I have 10,000 shares of this, it's going to pay me $240,000 per year. That's a pretty nice retirement. that might start for now, but over time, if the price moves against you, the principal that they have is going to, go down, because they're going to have some pretty nice dividends for a bit. But if you're looking over a 5 or 10-year period, maybe that $240,000 dividend gets cut to $200,000, and then $150,000, and then at some point, if there's some violent moves, it could really go down a lot more. So that's something that I'm a little bit. That's something that I personally would worry about. I actually think if you're interested in doing something like that, it's worth it for you to learn about covered calls. I mean, if folks are really interested, I could try to do a video on, or I could definitely do a video on that. I've sold covered calls for years and years. I don't talk about it too much on my channel just because it's not the focus of what I do. But I would say you should, if you're interested in a product like this, it's really, really worth understanding deeply what they're doing and maybe just trying to do it for yourself. Because on the flip side as well, you won't pay their fees. I don't know what the fee is. Let me search on this. Yahoo Finance might, or you know what? I'll just search MSTY fees. I wonder if MicroStrategy says it. Or sorry, Yahoo Finance says it. Expense ratio 1%. So on top of all of that, they will take 1% of this. It is not going to you. It is just their fee that they're taking. And so that's another reason why, I don't love these products. Again, there is a place for it for folks, but that's kind of my overall thought on it, right? Because on top of all the things I said before and those risks that you have with it, there is a drag. Yeah, it's a crazy high fee. Again, it's 1%, which, or 0.99% according to Morningstar on here. And again, I haven't corroborated. This is not a first-party source, but let's just assume that that's true. That's an additional drag on what you're getting there. So that does worry me. All right, so sorry, and I know Walkaza had a question from you, but I think maybe a comment on MSTY. So Walkaza says, the purpose of MSTY is income and nothing more. It requires volatility, and that's why MSTY tracks MSTR, because it has been an excellent income producer, but to each their own. Yeah, and so that's the I get it. I do understand what the purpose is, right? And I do understand somebody who wants income. What I worry about is the long-term sustainability of that income. Like, people, again, it serves a purpose, but I just think some people have a misguided view of it, where they say, hey, this is paying out, whatever percent, the current yield is yield 129%. And then, again, maybe if they're able to juggle this, if MSTR doesn't actually have such violent moves where the calls that they sell don't end up getting, don't end up getting them in a bad spot, this may pay out great for people, right? Forget the 1% fee is really secondary. It is a small drag, but it's secondary to if they're able to do this and the price action does work in their favor. This may turn out to be a fantastic investment, right? Like if you got 129% yield on top of, the value increasing or being stable over time. And again, I don't know what this has done so far. All-time chart, it's been, cut in half. Where I'm sure if you overlay that with MSTR, it probably, I don't think it's done that. Let's see, can we do a comparison here on Yahoo? I feel like maybe if I do the advanced chart, I feel like I can do a comparison here. I think they changed this thing. I don't know how to add a comparison on here, sorry. But that's yeah, I'm not sure. I'm not going to waste more time trying to figure it out. But that's, those are my thoughts. Okay, sorry, well, cause this question, I'll get to it. Did you cover the software side? I only briefly, and I say that, I did it in the first, minute. And let me give you my opinion on the software side here. So I will give you the caveat. I do not know their software in detail. I know that it is fairly mature at this point, right? I think their software platform has been around for a long time. But the reason why I don't is because, strategy is, enterprise value $130 billion. Their revenue from the software side in the trailing 12 months was $460 million. The operating income on that, right, their profit from that was, last 12 months negative. But if you look over the past couple years, it was not particularly profitable. And again, I'm looking at this, not their net income, because their net income includes some stuff from, financing activities, not from operations. But the operations is the software side of MSTR, and it's basically operating at a break even. Right, so what's the value of a software company that's operating about break even? It's mature, right? They're not growing, right? Their revenue is actually slowly decreased if you look from 2021 to today, right? In 2021 they did $510 million. 2022 almost exactly 500. It was $499 million. 496 in 2023, 463 in 2024, and then even slightly lower in the trailing 12 months. So, I don't know the future of this. I didn't dig into it because as of right now, the valuation of the company is very, very, very much driven by their Bitcoin holdings and their Bitcoin treasury operations. Right? The software company, if I was going to give you super quick napkin math, if I were going to look at this, and I'd say, what's a software company is breaking even. It's not like losing gobs and gobs of money. Let's just be charitable and say it's breaking even, right? I didn't look in the details and say why. Some of this could be stock-based compensation, could be one-time expenses. There's reasons why maybe this dropped from, modest, very, very modestly profitable in prior years to now quite negative. Negative $66 million in the trailing 12 months. Let's just be charitable and say it's break even. Let's say that they will eventually grow, but for now, let's just give them a price to sales, do base valuation on revenue. Your software company, let's be generous and say a price of sales of 10, right? Which I think would be pretty generous for a software company that is slightly declining in revenue and is at roughly break-even profitability. You're talking $4.6 billion from the trailing 12 months of $460 million, right? So that price of sales of 10 gets you to $4.6 billion. Going back again to their overall market cap 117, but if you add in their debt, their preferreds, enterprise value 129 billion dollars, that 4.6, if I was being charitable with their valuation over, of their overall enterprise value, 128.8 billion dollars, that's 3.6%. And again, I think that's actually a more than what the market would value that software company as if it were standalone. I'd think something more like a price of sales of, I don't know, 5 might be more appropriate, which would be like half of that. And so that's why I did not cover it in detail. I don't think that it's significant. I wouldn't be surprised, honestly, if MicroStrategy decides to spin off the software business and just view that as a one-time sale of that business, and they could take that money and just buy more Bitcoin with it and accrue that straight up to the common stockholder and just be a pure play Bitcoin treasury company. I would not be surprised to see that happen. It may not, right? Obviously, it's a little bit interesting because, the software business, Michael Saylor is still around. He founded the company. He may have some emotional attachment to it because he's like, this was my first big, huge hit, right? And it's driven a lot of his, a lot of his stature and legacy, and was what actually allowed him to pivot into a Bitcoin treasury company. But hopefully that gives you kind of my thoughts on it. I don't know if you have any more specific questions on the software side of MSTR, but I just don't view it as, if we're looking at the stock as investors, I just don't view the software side of the company as being very significant. It's just not a big piece in the overall context of MSTR. They can't spin it, and NASDAQ will kick them out. It's possible. I actually don't know what the listing rules are. I think, right, so that's interesting to say, like NASDAQ will kick them out. Maybe with what they currently have for Bitcoin treasury operations, but let's say hypothetically, if they were to offer some other Bitcoin backed products like loans or something where they are generating, something where you can squint and say they're closer to like a bank, right? Where this is a company or a financial technology company. If they were to start generating revenue somewhere off of that is Bitcoin linked, Bitcoin backed products that are, again, I'm not going to speculate on exactly what it would be. I mean, the simplest one would be loans, or maybe they get some Bitcoin backed mortgage product or services along those lines that they would start to do that would let them, that they can uniquely offer because they can backstop things because they have a gigantic pile of Bitcoin. That might be something that gets unlocked for them in the future. But you're probably right. Like, and I don't actually know the listing details in terms of like what does NASDAQ, NASDAQ has a whole bunch of different requirements, all the exchanges do, so that's a really good point that I hadn't really considered, but I wouldn't be surprised if they, if it's a part of the long-term strategy and they do what they have to in order to unlock that as an option. But I don't know if you had any, again, Wakaza, I don't know if you had any other more specific aspects you were hoping to, that you were asking about, that you were interested in for the software side, or if I answered your question, but that's kind of my perspective on it. MSTR revamped their software products and spent 10 years in development. Yeah, it's interesting. It's also a really competitive market, right? They're competing in business intelligence against a bunch of other companies. I don't know them in detail. It just, again, even if they return to growth, I think a 10 price of sales would be pretty appropriate for them before you get a pretty long track record. And at the rate that they're going, right, it also is maybe another way to view it is, what's the relative, let's just give a 10 price of sales right now and then say, well, what growth might they have? What's their growth rate going to be on that software side of the business versus the growth rate on their Bitcoin treasury, in the Bitcoin treasury operations that they're doing, right? I mean, they don't have to, the growth rate might be higher even still, even if the software company returns to growth, it might be higher on their Bitcoin treasury operations because they are the clear leader there. I don't think they're the leader in business intelligence, business analytics, all that stuff. Maybe I'm wrong. Again, I did not dig deep in. So if that's what you're really looking for, I'm sorry. I have not done the research. I just can't answer. I can't give a really good viewpoint on their products. It's a very, very complex and competitive market in terms of, enterprise business intelligence, business analytics software. There's a lot of companies out there that do that. They're competing with many, many, many other folks. Maybe another video talk about their software another time. Yeah, I can do that. I can look into it. Again, it is a little bit hard to get good signal on that because there's so much competition out there, and really it's a question of what do enterprises want. And my best indicators for that are like, what are their financial results? But I'll take a look at it. So, all right, I actually probably should hop off. This has been one of my longest streams ever, I think, over almost an hour and a half. I really appreciate everybody who hopped on. If you have any questions or comments right now, I'm happy to take them right now. Otherwise, I will hop off. Wakaza asks, how is the fam? They are good. I can hear them in the background. They just got home. They were gone for a little bit at the park. They are good. So thanks for asking. It's they're, I love my family. They're great. All right, I will probably hop off. Thank you everybody for watching. I appreciate everybody coming. Hopefully I was able to help you out. Yeah, thanks for Wakaza says good seeing you, and it's good seeing you too. I really appreciate having folks on here. Again, let me know in the chat or the comments what you are interested in. I'm happy to look at other stuff. I have a backlog of stocks. Folks have requested Nightscope, an update on Nightscope. They've requested an update on Venture Global. I will get to both of those fairly soon. I have a backlog topic from a while ago for Archer Aviation. That one's an interesting and complex company as well. I will get to that. That's sort of my current backlog that I have, so let me know what else you're interested in. Obviously now, the software side of MicroStrategy, I will try to look at. That one might take a little bit more time, unfortunately, just because there's a lot to it, but I will note it down and see what I can do. So, Thank you everybody for watching. Really